Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for the market recap. And if you're interested in any of the services I provide, please check out the links in the description below for both the Patreon and Discord. And please make sure to give me a like, a subscribe, maybe a share or two, and definitely leave a comment and let me know what I'm doing right, what I'm doing wrong, because I'd love to get your criticism, whether it's constructive or not. Give me the engagement, baby. Now, let's get into today. This has been an interesting day so far. We're just coming on the market close in about 45 minutes. I believe Jerome Powell from the Fed is still speaking, or he's wrapping it up as I'm making this video. The actual Fed funds rate came out. We're going to check out what they raised. So the interest rate was actually 4.5%, which was the forecast. So not completely unexpected. They raised it by zero point 0.5 basis points. But what was unexpected was that they're seeing for next year to actually hit 5.1 when the consensus was they were going to hit 5. So we were going to see maybe another zero point 0.5 basis point raise here going into 2023 Q1. But the report that came out from this press conference, from this rate statement, is that they're calling for 5.1, which that's a huge disconnect because, okay, so we're not going to do 0.5. We might be doing 0.75, and then what? So there's a huge disconnect that's going on. And then also what came in with the statement was their PCE data, and their reaction to it was, the lack of vocabulary have it's completely confusing. I want to say nastier words, but it's absolutely confusing. They are viewing inflation in a way as if it's not rising, and I don't even know what to say to that. That is absolutely incredible. It's extremely foolish. And that is extremely hawkish because they're in the stance that they can keep raising rates, and they're just completely closing their eyes to that inflation's already rising. They think that it's completely not not rising beyond the data they had from the last quarter and a half. It's unreal. So that definitely sent the markets into a bit of a headwind, because though the data did meet expectations, the forecast and their decision met expectations, the language that came with it was completely out of this world. It's as if they're in a bubble. And though I didn't finish the press conference, they just, Jerome pretty much kind of doubled down on it. He held his ground under questioning, and a lot of the questions were really underwhelming too. So this was a bad, in my opinion, a bad press conference all around. And the statement was very confusing. One of the most confusing ones I've seen in a long time. I completely disagree with their take on inflation, but I agree with what they're doing in regards to raising the rates at 0.5. I'm a little surprised that they're calling for 5.1 in Q1 of 2023, but that's not completely out of this world. So I can see that also playing a role. Being fairly accurate with the data they have, I should say. But anything higher than that, to me, will just be an over tightening. But we'll see. I think they've already over tightened, but we'll see what comes from here. But overall, it's been a very interesting day. Now let's get into the charts and see what's going on here. So the dollar, off of the news, has been coming down just a little bit more here. It's trading further into this blue zone here. So I was looking for a rise coming, but pretty much today. I did think that though the data would hit, I did think the dollar would find some strength coming into the close of the U.S. markets today, but it doesn't look like that's in the cards right now. So we're potentially going to actually sell off for the rest of this week in the dollar, which is pretty interesting. I find this to be a little concerning. Now, I'm not saying concerning in a way that I want the dollar to rise. I'm getting more bullish on it. I was hoping for a more bearish structure coming out of the dollar. So if you've been following my recaps, I've been looking for the dollar to have a nice short-term pop for over the next week or two, and then create a right shoulder structure from a much larger head and shoulder structure here. But if we continue to sell off into this ascending trend line and really this blue zone here, I'm going to have to start changing my bias on the dollar shorter term. Because long term, I'm actually quite bullish. Again, if you've been following me, you know I've been calling this is going to be the decade of the dollar, a bullish dollar pretty much all the way until about 2030. But I was looking for a significant pullback in the dollar, coming back down to 100 and then sub 100 towards 97-ish here. But if we're just going to actually stream down towards this ascending trend line, the probabilities of this trend line breaking decreases quite a bit. It decreases quite a bit, very significantly actually. It's one thing if we actually start building out this very bearish structure by building out this right shoulder, having a nice little minor rally in the dollar to build that right shoulder, then the probabilities of this ascending trend line here that we've been following since 2021 to break actually increases dramatically. So that's why I was very confident over these last couple of weeks that okay, the dollar's likely going to build out this bearish structure and then we'll break this ascending trend line and come towards this lower zone here. If we just start selling off into it, streaming down as we have, that actually becomes less likely, and it becomes more likely that we're going to actually hold not just this ascending trend line, but really this zone I have circled right here. So that will have to change my bias sooner for the dollar to actually have a significant rally higher, and potentially go even higher than I was thinking. I was looking at a max around 108-ish. We could potentially be going all the way up towards filling out this higher fair value gap up here, and actually looking to attack the new local highs we made over here. So this can get really, really hairy. But we'll see how this all plays out. But I'm not liking that the dollar's coming down as the rest of the markets, stock market and crypto markets included, are generally going down with it. That's not a good sign at all. Just saying. Chart wise, I still am seeing downside. I mean, there's nothing here that's telling me this second that we're gonna see momentum slow down here and then come back up. We did already take out this low pivot, and now we're attacking this low consolidation right here. So grabbing liquidity under this level. So we may get a spike up going into tomorrow in the dollar if we do actually find that those bids. The question is now, will that even matter for the overall markets? Because as of right now, it doesn't seem to be that big that big amount, that huge amount of correlation that we've had for most of this year. Like it's been really waning, especially on crypto. But now I'm starting to see it on the indexes. So this is gonna be pretty interesting. We're gonna see how weak will the dollar get over the next week or so, and how will the markets react. My money's still on that the markets will rally going into the end of this month. But now I'm becoming less and less sure of a bullish Q1 of 2023. If the Fed's going to hold this sort of stance, it's going to be pretty hard to have a bullish, any significant bullish momentum going into Q1 of 2023. All right, next let's go into the Dow. Let's take a look at the Dow. See what's happening here. So, relatively a kind of quiet day considering the news. So right now we're trading as a doji, had a nice little spike back up into this bearish fair value gap, sold under it, and sold a little down, kind of coming almost towards the low side and coming back towards this bullish fair value gap. But we're trading sideways. I still think we're going to see some downside. So kind of like my doji, my scribbles are indicating here that we should see a potential pullback, filling this bullish fair value gap, and then coming back down towards this descending trend line we've broken out bullish, and then looking for this consolidation, this bullish consolidation on this structure, and then having that continuation higher, and then ultimately looking to target this high consolidation over here. Essentially, I can draw that better. So right around here, looking to target this level here, grab the liquidity around this zone, and then I do think once we do that, we're going to find a major pullback from there. Okay, this may have been it though. Okay, this little spike up here, this may have been it. All right, so we have to respect that we are still in a macro bear market. All right, so we have to respect that. We broke the character from the 2020 rise. We broke this character, and we have to respect that. But I do think we have some potential to go a little bit higher. I'm not calling for the all-time highs to get taken out. I don't think that's going to happen for quite some time, but I do think we're going to get a bit more of a push higher to look to take out any liquidity residing at 35,500 to potentially 35,000, 36,000, 35,800 to 36,000. So this is kind of the ultimate zone I'm seeing price get to, and then that probably will lead to the continuation after we take the liquidity out from there, the continuation of the macro bear trend, breaking all the way down sub 30 and going towards 29, 28, and then eventually 25. All right, next is S&P. So S&P, similar to the Dow, having another doji day, trading on top of this bullish fair value gap. Actually filled this already, so we can actually take this out here. So let's get rid of this from the chart. It's been just coming into this larger bullish fair value gap, tapping on top of it and popping up. It's been doing this over and over and over, but I'm looking for this to finally curl over and break down. Now again, this is under the premise that the dollar will find some bids and that the correlation with the dollar will remain strong as it has been for most of this year, that we'll see this break down as the dollar starts to break up. But if that doesn't happen, all right, if that doesn't happen, let's say the dollar just stays weak, and then we're going to be looking at the S&P chart in a vacuum, it still should come down. It still looks likely to come down, to break down, fill out this bullish fair value gap, and potentially take out these lows just to grab the liquidity, and then you make that higher low from these lows right here. So you're pretty much making a higher low from this low here. So you're this wick here, you're looking to make a higher low somewhere over here, and then you have that continuation higher. So my story on this has not changed at all, even though the Fed has come out pretty ridiculous today, but nothing's really changed in that regards. But what I am watching now much more closely is the correlation with the dollar. Will this start to pick up again, start to strengthen again, or are we going to continue to watch that weaken? It's going to be very interesting. Next is NASDAQ. So NASDAQ trading outside the descending channel, tapping the bullish fair value gap just like the SPY. NASDAQ looks pretty interesting. I do still think this also will break back down just to have more liquidity needing to grab to move higher. So I am seeing all the US indexes coming higher this year, but I am becoming much more I want to say conservative on where they'll get to. I'm still looking for the NASDAQ to tap the low side of this green zone, but next year could be a pretty bad year in the beginning if the Fed's not going to buckle on their policy. If they don't buckle on their policy, this is going to get pretty rough because a lot of the bullish momentum that I'm seeing and many others are seeing is on the premise that the Fed will buckle and start to ease even more into next year. Now, this doesn't mean next year is going to be super bullish. I actually think it's the opposite. I think next year, pretty much once Q1 passes, I think the rest of the year is going to probably be pretty bad. But if the Fed comes into next year holding strong what their stance, it's going to be it may be a completely bad year. So we'll see. But looking at the charts, I do see continued downside just to come back to this fair value gap, fill out more of this liquidity, and it should find some support around 11,100 to 11,000. So this general zone here, which trades on top of the descending trend line and also this minor support level, and maybe taking a stab towards 10.8 just to grab any liquidity under this level. But if we're going to hold any bullish structure that's potentially being formed here, then we're going to look for that continuation higher, not taking out the lows of 10,427. Okay, so this is clearly a divergence play. Like if you're using oscillators, this is clearly a divergence play. Okay, that like if you're an oscillator is probably showing a bullish divergence from here. So this is what we want to see play out, and if that does happen, you're looking for a breakout from this high pivot here. So looking to fill out this entire green zone, but then that divergence probably completely plays from there, and you'll probably break down again from there. Okay, all right, next is oil. So oil's playing out. Oil's one of the few things that are just completely following the path. Really not, it's crazy. Oil's just like, I hit my level, now I'm going up. And as we've been calling it, as I said, it was very likely once it got towards this descending trend line, watch for this to spike on up, and it's probably going to keep on going until it gets back towards 685, but it is going to be fighting this fair value gap zone right here. So it's actually tapping into it already, or about to tap into it, this right here. So watch for this liquidity zone right here to start getting tapped into. If we are going to make a lower high from this high here, it's going to be happening right here. Okay, but overall, I'm bullish on oil long term, just like I am the dollar. So I'm looking for this to eventually find the fuel to start breaking up and then start making a new character, pretty much taking out these highs and making a higher low, and then over next year and many years really filling out this huge monthly structure that actually has a bullish bias, and then eventually breaking out going towards the 130 pluses. So watch out for oil. It's at the bottom of a bullish structure. It's popped up from it, and now we're going to see how much continuation will it have. Next is gold. So gold broke past 1800. As I said, it likely would, grabbing liquidity above this high pivot. Any liquidity that was residing there is probably gone from this high wick, and now it's actually tapping into this consolidation. So I'm actually going to be looking for gold to have a pullback over the next couple of weeks. So I want to see gold potentially pull back to these fair value gap zones down here, making that higher low structure potentially, and that would actually create somewhat of a inverse head and shoulder structure. And then if that does happen, I believe the one-to-one move from the neckline to the head is taking out pretty much this consolidation and getting you right towards this bearish fair value gap here. So that could be what's in play here, and gold is quite bullish structurally as well. I'm liking what I'm seeing, but it does look like it needs it does look like it's very likely to pull back. And as long as the pullback doesn't exceed these lows down here, which is not very probable, then you're looking at a bullish pullback coming into these bullish fair value gap zones. Next is the silver chart, so SLV. So silver having that continue. So in the last recap, I called watch for silver to get towards these fair value gap zones, start tapping it, and once you're there, that's your level of where, okay, you're looking for a major pullback. And this is where we're at. So it's looking good. We may see continued buying into this level, so going a little bit higher, going towards 24.5. But we are definitely in that zone where a pullback is extremely likely now. We're getting to the really high percentage probabilities now of watching silver pull back. How deep? Well, I have to see the price action, but most likely at least back to, at the very least, back to this new bullish fair value gap zone. It's formed right here. So this right here. So this is a new bullish fair value gap that's been formed. So that at the very least is the zone it'll pull back to. But in my opinion, it's more likely to pull back further, okay, because it'll likely follow gold. So it'll probably fill out this bullish fair value gap coming towards 22.5 and then spiking into this fair value gap zone, and then potentially even going all the way down towards this ascending trend line. Now this ascending trend line, depending on how long or short it takes for silver to come up, to come down. This ascending trend line can be much farther along than where it is now. So if this takes weeks to months, you may see this ascending trend line all the way over here, and price could be all the way over here. So if this is going to take a huge amount of next year, which is possible, by the way, that is definitely possible. After such a rise, you may get a significant slow pullback on silver. You're talking about for most of Q1 to Q2, you may actually get all the way, at the end of March or something, down towards like $20 or something. Just depends on how quickly or how slowly it wants to pull back. But overall, I'm liking how silver looks. I'm loving where it is, but I do think the move to the upside is nearing the end, and we're probably going to have a nice pullback coming back towards, at the very least, 22 to 23, and then breaking through there and coming towards these lower fair value gap zones. And these would be great zones to look to potentially build out a larger, bullish position. All right, let's get into Bitcoin. Let's take a quick look at Bitcoin, see what's going on there. Okay, so Bitcoin had a pretty nice day again until the FOMC came out and almost got towards this bearish fair value gap zone, got very close at 18,600. I think it topped where 18,376, so just couldn't do it. and so far is having a very nice rejection. Now, I'm curious to see how this closes. Are we going to have a full-on rejection, a gravestone candle, so a gravestone doji potentially? Not sure. I think this might be a little bit too big, so it might be a shooting star or evening star, whatever the hell it's called. It's another bearish candle structure. We may see it. We have to wait and see how this candle closes in about 3.5 hours. But so far, it looks pretty good for probably selling, buying, getting bought back towards 18,000. I do think it's probably going to test that level quite a bit in this next 3 hours, and then we'll see who can win that battle. Is it going to be the Bulls? Is it going to be the Bears? It's going to be a pretty interesting battle to see, but there's really not much to say here. We've broken through this minor, I would say fairly a significant resistance level at 17,585. It's significant in that it is the low wick of this consolidation that lasted since June all the way until October or November. But it's not major resistance like something like this, right, where you have the liquidity zone residing, and this is where the bulk of the consolidation happened. But it is a fairly significant level to have retaken. We'll see if we can actually hold above it as we come back towards it. The real question will be, will there be any continuation to the upside, or was this the move? And if this was the move, are we looking for a breakdown to take out the lows, or are we going to be looking for a higher low? Now, we have to actually have the bias that we're actually going to make a higher low. The reason why is because we've actually we've changed character. So we had this descending structure, okay? We broke through, had a bullish consolidation, a continuation, and this actual continuation actually was a one-to-one from this bullish structure here. So if you take a look here, let me show you. So actually, we did play out the entire flagpole of this. If you want to call it a flag or structure, it's fine. So here was your breakout level, broke through, and you've completely filled that one-to-one move. So a pullback back towards this consolidation, so back towards 17,100 and potentially even lower, going back towards 16,600 to 16,550 to 16,950. So this bullish fair value gap zone right here is a very nice place to look for a pullback to. Okay, this is definitely going to be a very interesting place to see if price comes back to and looks to hold it, because if it does, then guess what, you're making a higher low from these lows down here, and you're potentially building out a much larger structure that's going to look to challenge this consolidation. Now, it doesn't mean it's going to beat it. It doesn't mean it's going to win. It just could be a larger bearish structure, right? So we could be looking at what? You have these lows, you make a new higher low here, and you start connecting it up, and you're starting to have an ascending structure. Well, that's not so bullish looking. Okay, that's actually bearish as hell. So that's, you have to let this stuff play out. When you're looking at the daily time frame, a lot of this stuff takes a lot of time to play out. But we could be looking at a much larger structure being formed here if we have that higher low structure. Okay, and we've seen this structure before. I mean, you see it right here. Okay, you have this sort of structure all the time when you're in a bear market. It's all the time. And I go over a lot of this in my tutoring, so make sure if you are interested in learning how to trade like I do, or you just want to learn how to trade, whether you're a swing trader or day trader, concepts I teach are, I would say universal. They work on every market, and they work on pretty much every strategy. I teach this sort of stuff, very basic stuff, but I give you the advanced ways to look at it, and really the correct ways. There's a ton of wrong information out there. It's pretty interesting. So we'll see how this plays out. Again, I have a bullish bias in the short term. I do think Bitcoin's probably going to get back towards 18.6 at the very least, potentially break past 19, getting back towards like 19.6, and maybe even tapping 20,000 here. But then once we get into this big block here, I'm going to have to start looking for significant pullbacks and potentially taking out this larger bear structure it potentially will form, or at least the short-term uptrend it'll be on if we get up there. Okay, all right, everyone, that is it for the market recap. I hope you enjoyed it. Remember, if you have any questions, make sure to ask me in the comments, and if you are in the Discord, you can always contact me there. I actually recommend asking me the questions in the Discord because far more active there. It's a lot easier getting in contact with me. Okay, all right, everyone, remember, be patient, be vigilant, and be nimble. I love you guys. Take care.